Welcome back, dear traders. Wall Street indexes closed lower on a Wednesday, as expected by InstaForex analysts. The reason is targets downbeat earnings for the third quarter and a strong US retail sales. The Dow Jones shed 0.11% yesterday. The Nasdaq plunged by 1.54%. The S&P500 lost 0.82% to close at 3,959 points. The benchmark stock indexes opened in the red today. The S&P is expected to trade in the intraday corridor between 3,860 and 4,010 points. Wall Street was alarmed by robust US retail sales released on Wednesday. Investors revived fears that the US Fed will forge ahead with its aggressive monetary tightening, despite growing consumer spending and even despite the fact that easing inflation gives the regulator leverage to moderate the pace of rate hikes. Stronger than expected retail sales mean that consumer confidence was not dented by large-scale rate hikes aimed to tame soaring inflation. Retail sales jumped by 1.3% in October to $694.5 billion, much higher than the consensus for a 1% increase. One retailer did not take advantage of a strong expansion in retail sales. Target reported disappointing profits for the third quarter and presented a gloomy outlook for the holiday season. The company also said that it would cut spending by $3 billion. Following the report, Target shares slumped by 17%. Today, Nvidia shares climbed 2.2% in the New York pre-market because the company's revenue in the third quarter surpassed the forecast. Another good piece of news is that the US first-class chain stores, Macy's, upgraded its forecast of annual profits amid beyond demand for premium merchandise. In response, Macy's shares leapt by 8% in the pre-market. Nevertheless, corporate reports could provide Wall Street with a minor support. Fresh data on the labor market proves its resilience. The number of first-time unemployment claims decreased by 4,000 to 222,000 last week, below the consensus of 225,000. This gives the US Fed the opportunity to stick to its hawkish rhetoric. Today, market participants can evaluate data on the US construction sector. Housing starts in the US declined by 4.2% in months to 1.425 units in October, following a 1.3% drop in September. The consensus was about 1.41 million units. Besides, building permits fell by 2.4% from a month ago to 1.526 million in October. It's their lowest reading since August 2020. Economists had expected 1,512,000 permits. This metric is a leading indicator to shed light on future trends in the construction sector. No wonder building activity has been shrinking amid rapid inflation of building materials and growing mortgage rates. Investors got to know the manufacturing PMI by the Federal Reserve Bank of Philadelphia. The index plummeted to minus 19.4 points from a minus 8.7 points in the previous months, the lowest score since May 2020, and below the expected minus 6.2. The US dollar index is benefiting from the retail sales data, the healthy labor market, and the mixed macroeconomic data. Having gained 0.7% intraday, the index is now trading at about 107 points. The intraday corridor is seen between 106.40 and 107.50. Fed policymakers are unwilling to drop any hints about when the cycle of monetary tightening will be over. Mary Daly, who used to be one of the Fed's doves, said on Wednesday that the pause in the cycle of rate hikes is out of the question. The ultimate levels of interest rates could be somewhere between 4.75% and 5.25% next year. Easter George said that policymakers should act cautiously, not to stop too early in raising interest rates. Soft landing needs some effort. Now the market expects the US Fed to increase the interest rate by 50 basis points in December. That will be followed by a series of rate hikes by 25 basis points in early 2023. Eventually, the official funds rate will stand at about 5%. The red-hot inflation data from Canada confirmed that the central bank would be hit with the sharp rate hikes. The annual rate of Canada's consumer inflation came in at 6.9% in October, the flat reading as in the previous months and in line with the expectations. The CPI surged by 8.1% in June, the fastest annual rate in the last 39 years. Bank of Canada Governor Tiff Macklem said that understands the pain that Canadians are going through due to tight financial conditions. However, the central bank is committed to its mandate to ensure price stability. Now the markets are divided in the two camps, sharing the prospects of a rate hike by 25 and 50 basis points in December. The loonie is wound down by the firm US dollar and the falling oil prices. The crypto market is overwhelmed by pessimism. Digital assets are trading in the red in the pre-market. Bitcoin edged down 0.3% to trade at $16,470. Ethereum, Solana and Ripple are also trading lower. Litecoin is the only token to reverse upwards, having gained 3%. Crypto investors are digesting the scale of a slump in the FTX. Fresh news does not encourage the risk-on mood. Bloomberg reported that American and Bahamian authorities have been discussing the possibility of bringing Sam Bankman-Fried to the US for questioning. Major crypto players, Genesis Global Capital, suspended customer redemptions in its lending business on Wednesday, citing the sudden failure of FTX. All in all, the information background is bearish for the market. Bitcoin is likely to trade in the intraday corridor between $15,700 and $17,000. Trade with the profits and keep close tabs on financial markets in InstaForex TV channel. See you tomorrow.